Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And today onto the show we do have our two of a very special guests. But before that, viewers, a note for you all where you can connect with us live on a WhatsApp number that is flashing on the screen and will be flashing on the top of your screen throughout the show. Tell us your name, the stock that you have invested in, and even the time horizon you wish to stay invested, or if you're looking for a fresh purchase out here or some of the other ideas, do let us know that as well. You can also connect to us on our social media pages of ET Now on Facebook as well as X handles, and we'll try to take as many queries as possible. But before that, let's get back to our two of a very special guests. Kunal Bothra is here to guide us technically, and we do have Gaurang Shah to help and get a guidance with respect to the fundamentals. With this, let's get started then. And the first query that I have is coming in from a viewer named Raj Gopalan. And Gaurang, let me take it from you, because he wants to know your best picks amongst the PSU banking names for the long term, maybe for the next 2 to 3 years. Just a while back, we were discussing about the financial space, and you did say that over the long term, you are a bit more constructive on the sector. So any of the top bets from the PSU banking name?
Sure, Srishti. So we have a coverage on overall 4 or 5 PSU banks. But if I had to pick two, then the first one would definitely be State Bank of India, largest bank in India. And the second one would be maybe a mid to large cap bank called Indian Bank. Uh, I don't say that others are not good, but since he's asked specifically to pick two, then State Bank of India and Indian Bank, this would be the frontline picks. Other than that, we have coverage on Bank of Baroda, Bank of India, PNB, Canara Bank, but these two would be preferred.
I'll come to you, Kunal, then. Kumar from Kerala is writing. He wants a technical and a fundamental view on Manappuram Finance for the short term, medium term, and long term. Is it worth buying? He's asking. Now, if you look at Manappuram Finance, Kunal, it hasn't really given any returns in the last year to in the last 6 months. In fact, it has been in a corrective phase. Just 1 month back, it has really started moving up. So from here on, if he has to get in, then what should be the levels he should be watching out for? Is it a good pick as far as short and the medium term is concerned?
Yeah, I think frankly over the last 4-5 years, I've seen Manappuram Finance being a lot more stagnated around the 175 to 180 odd band. So that was the pivot range for pivot point for Manappuram Finance. Stock moved to 220. There was a point, I think, when the stock moved to even 120 odd mark. But then I think more or less it's just about remain at this 175, 180 levels. So currently also the stock is trying to enter into that zone of 175 to 180. Now it depends now, because if you look at it over the last 5-6 years, the stock has literally not done anything in terms of the consistent returns. But then what's happened is over the last 2 months, we've seen the stock going through one of the worst phases in terms of news flow. But then the prices have made a very strong comeback. That generally is an indication that the stock is gearing up for a breakout and an end of this major range action which has lasted over the last 4 to 5 years. So if you are looking at it over the next say 1 to 2 years kind of a time span, only then I would recommend a buy in Manappuram Finance.
All right, that's the take coming in on Manappuram Finance. But moving on to the next query then, and this one is on NMDC. Let me take it from you, Kunal, because Mohit from Ludhiana has got 500 shares of NMDC at a price of 136 rupees. His time horizon is for the next 2 years. What will be the advice here?
See, I would recommend to buy as well as to maybe even add further for NMDC. Now, what's happened is that the stock did extremely well in 2022, 2023, and I think first part of 2024, where it moved from an adjusted price of 30-35 towards I think at one point it was almost 90 or 95 odd zone. So I think from there on, from a 3x, 4x kind of an up move, the stock has gone back into a time-wise consolidation. Now, ideally, we see 3 to 4 quarters as a good time-wise consolidation for stock prices, where these stocks complete their mean reversion, they get back into a stagnating phase, the volumes drop down significantly, and the prices correct for these stocks. So I think we have now ended almost 3 quarters of consolidation for NMDC, maybe another 1 or 2 months, which could probably be a more of a drag for the stock. But if you're a long-term investor, I think at current levels of 65, there could be a good risk reward as well as a time-wise risk reward opportunity for NMDC.
All right, Gaurang, I'll come to you. Now, this one's by Deepak Malhotra, who's from Mumbai. He wants to know about Swiggy, he says that he bought Swiggy at 610 rupees. What are the prospects for this counter? Should he be holding it? What are the levels to watch out for? This space is a very, very interesting space. I mean, it is a duopolistic market, but the competitor, of course, Zomato is doing pretty well. What are the prospects for Swiggy for now, as the competition, coming a lot from the unlisted space as well, with Zepto, and all the other big major players getting into quick commerce. What are the prospects for Swiggy, and what are the levels to watch out for?
Levels will be very difficult for me to put across. I'll leave it to my good friend Kunal to give you levels. But on the fundamental side, if you ask me, let me give a disclosure. On both the quick commerce companies, that is Zomato a while back, we had a coverage on the IPO, then we have a standalone coverage note. And the very recently listed competitor Swiggy, we had a IPO note from a long-term point of view to subscribe before the IPO. I believe this gentleman would have definitely invested in Swiggy from a long-term point of view. Yes, there are a lot of competition coming in, but at the same time, there are a lot of opportunities in terms of tapping the untapped, especially in the tier 3, tier 4 cities, and equal opportunity if one has to extend that view to semi-urban areas. And the commentary from a lot of these quick commerce company management is that they are planning foray into all these areas where they still remain untapped. The grocery business in terms of Instamart for Swiggy and Blinkit for Zomato is doing extremely well, auguring extremely well. And in fact, they are one of the cash churning businesses for the parent company. So if you've invested in Swiggy from a long-term point of view, I will make the IPO note as a base of my recommendation, and I would advise a hold. And just in case if the stock has to slip closer to 500 or below 500, then one can think of adding as well as making a fresh investment.
Coming in on Swiggy, we're moving on to the next counter then. And Gaurang, any take on Natco Pharma? Because Vignesh has been holding 400 shares. His buy price is close to the current market price at 1320 rupees. Should he go ahead and add more since the stock is a bit under the corrective mode? What will be your advice on Natco Pharma?
So, Srishti, adding is also an art. When you go to average a stock which is fundamentally strong, in which case Natco Pharma, we do have a hold recommendation from a long-term point of view. And averaging should be done at least 5% or below your earlier acquisition price. And if and when you get that correction of 5%, then you should not be in a hurry to average whatever quantity you hold at a higher level. For example, if you bought, say, at 1400 or 1425 Natco Pharma 100 shares, then maybe, closer to 1300 or below that, try to average 25-30 shares. And if you have a little bit of high risk appetite, you can average a little bit more. This is called effective averaging over a long-term investment time horizon. And you will actually get the benefit of price averaging, if you follow this kind of pattern or the principles. So I would say, first of all, hold on. As you get that kind of a correction that I mentioned, maybe 1300 or sub 1300 would be a good level to average in Natco Pharma from a long-term point of view.
All right, with that, it's time for a quick breather. You don't go anywhere because we are getting you more queries and answering all of your questions on the stocks. Stay tuned. Welcome back. You're tuned into Buy Now Sell Now, where we are taking you through all the stock queries that you have sent us, and we are joined by Gaurang Shah as a fundamental guest, and of course we have Kunal Bothra on the technicals. Let's resume then. Kunal, you have fans here, and in fact, there's a fan of yours who's from Chennai, who's written that Kunal, being your fan, I've bought 150 Tata Motors shares at 790, but it went down to 440. He's not complaining, of course, but also he's bought 100 EID Parry at 976. It has also gone down to 890. What is the technical outlook on both these stocks? This is what he wants to know from you.
So thank you so much for that. First of all, I think both these stocks, Tata Motors as well as EID Parry, I think on the longer term charts, they would look fairly attractive. attractive. Now there comes a point where you have to start looking out for stocks when they go into a sharp corrective phase. Now Tata Motors specifically, I think from 1100, 1150 mark, where the stock topped out from a point. From that point, my indication was that the stock would probably go into a correction. Now closer to the 700, 750 range, I think could be a very good opportunity for long-term investors to start, entering into the stock price. My belief is that that the stock may just about stagnate, for the next 2-3 months, at the zone of 700, 750 thereabouts, for Tata Motors. But I believe that from a long-term play, that could actually turn out to be a very good opportunity for traders who have missed out on the previous leg of the rally or a major rally for Tata Motors. Same is the case with EID Parry, a stock which had done exceptionally well and I think was at one point one of the standout stocks from the entire sugar pack. That stock is also looking fairly attractive. So I would recommend a hold on both of these names. But what you have to do is just try and tweak your time frame from looking at this as a more short-term play. Look at this as more of long-term opportunity and try and use any kind of a strategic dip, maybe a 5% to 10% correction from your initial cost price as a good averaging out opportunity.
All right, then that's the take coming in on both of these names. But Kunal, let me come back to you because this query is coming in from Bala. And he's been holding shares of ICICI Bank at a price of 1300 rupees. Over 200 quantity is what he has. Should he go ahead and add more at current market price? This is the first query. And the other one is, at what price can he think of adding HDFC Bank?
See, I would not recommend a buy on both of these names. As I mentioned earlier that, specifically in your case, I think an averaging out, especially at current levels, because my belief is that many of these private sector banking stocks are showing signs of a renewed correction. Now, the best time to try and buy these stocks is when there is a slight degree of outperformance, a resilience or a relative strength with respect to the benchmark indices. It's a process. For example, there was a point in 2024 first half, I think the month of March or April, where ICICI Bank managed to stand out from rest of the other private sector banking names. And from there, I think, if I remember correctly, from almost 1000 or 1100 rupees for ICICI Bank, the stock moved on to 1300 to 1400 zone in a matter of the next subsequent 6 to 9 months. So all you have to do is just identify that phase when the stock gets back into a strong relative strength or a relative outperformance phase. That's where you should be looking to buy these stocks. As of now, these stocks are showing signs of relative underperformance or weakness with respect to its other peers. And I think that's one of the reasons why I would be on a wait and watch mode for both of these names. So they're good long-term bets, undoubtedly, but then you have to try and, time these stocks or buy them at a very apt level. I would believe that should be maybe another few months or few weeks away for many of these banking names.
Right, Kunal, another technical question for you. This is by Nikhil Sharma. He's from Mumbai and he's an intraday trader and a short and a long-term trader. Now, he has 10 shares of Infosys at the price of 1974 rupees. He wants to know if he should book out or he should hold on to it for the long term. And also there's another person, Manjula, who has also written about Infosys for the short-term period. What is the right price to enter?
See, first of all, for the first query, converting yourself from an intraday trade to a long-term trade just because it's not worked for you should not be a good style of trading. So I would specifically believe that you should try and introspect that whether you want to continue with the style just because stocks fall from your initial purchase price, or whether it's a strategy which you adopt for stocks even when you are sitting on profits for many of these names with trying to rail your stop losses. So that's a first introspection which I think you have to do. In terms of Infosys as a chart, for both of the queries specifically, I would believe that it's a very interesting chart in the making. The stock showed a very strong candlestick formation previous week Thursday, where it moved from almost 1850, 1870 mark towards 1930, 1940 levels. So it looks very attractive. After 2 days of mild follow-through up move for Infosys, the stock looks like that it could stagnate or it could just about consolidate for the next couple of days. But I believe that keeping 1850, 1870 as a base, you can hold on to the stock if you're a short to medium term kind of a trader.
All right, then moving on, and Gaurang, coming to you to have your take on HAL, because this has been one of the high flyers in the past 2 years, but in the past 6 months, we have indeed seen a decline over here. This query is coming in from Deepak from Maharashtra, where he has purchased 1100 shares of HAL at a price of 3794 rupees. He still had some profits in this particular counter. What to do with this one? Take on HAL? All right, I think we have just snapped that line with Gaurang. But Kunal, any technical checks out here? Because in the past 6 months, there's been a decline of almost 25%. Where do you see the stock headed?
Yeah, I think it's starting to turn out to be a very good opportunity, frankly, for investors who are looking to buy these defense counters, because after almost like 2 years of major uptrend, for the first time these stocks have started to show signs of correction. Now, yes, a 25% correction from highs is actually starting to be a good opportunity for traders on the longer term basis. But that doesn't mean that the stock would bottom out immediately, and you might see the stock which rallied up from 2022-23 in the last 2 or 3 years, in the same performance for the next subsequent 2 or 3 years. So there is a time-wise gestation which happens for stock prices when they go into a consolidation as well as a price correction. So price-wise, I think it's a very good opportunity where you should look to start nibbling into stocks like HAL, maybe add up few of the other names like BEL, etc. If you're looking at this as a more of a defense portfolio from long-term play. But then you have to be a lot more patient. You can't expect that these stocks would probably give you the same kind of returns in the next 3 or 6 months. That could be a bit of a fast stretch.
All right, then that's the technical take coming in on HAL. But Gaurang, help us with your view on HAL as well, because there's a viewer who has purchased the stock close to 3,700 rupees. What to do with this particular counter?
Well, first of all, don't rush to book profits. Srishti is what our recommendation is. And this recommendation is because we had recently come out with a buy recommendation on Hindustan Aeronautics Limited. 2025 is going to be a year wherein there's going to be a lot of positive news as far as the introduction of Tejas light compact aircraft next generation, resolution of the issue in terms of the supply from GE for the fighter jets, more orders coming in terms of the light combat helicopter Prachand, which has been a stellar performance in the air show concluded in Dubai. It was, I believe, last year, if I'm not mistaken. Our targets is somewhere in excess of 5,400 plus. But like Kunal was mentioning, I think if you invest in defense or in power or in capital goods engineering, then you need to have at least 1.5, 2 year, 2.5 year plus kind of time horizon. The longer the better. The reason I say this, Srishti, is that this defense equipments are high complex, high technology, very precise equipments. It takes time to make a prototype and then get it approved by various states and then the mass scale production. And once the mass scale production starts, I think your cash register starts ringing in. So don't be in hurry, have patience and hold on.
That's the view coming in on HAL, both technical and from the fundamentals. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
Welcome back to Buy Now, Sell Now, and taking a look at the markets because it's been just declining and we are at the day's lowest point and key support levels are being broken below in the markets right now because 350 points of cut is what we are seeing on Nifty 50 as well as on the Nifty Bank. It's 900 points of cut is what we are seeing. We were just discussing about the situation about the first case being reported on HMPV virus because just a while back we also got to know that there are 2 cases that are being reported in India, and that's the news coming in from the government agencies. Believe that is weighing heavy on the markets. Just the last man standing there, Bajaj Finance, which was lending support to the markets in the last 15 minutes or so, that stock is also seen to be trading lower and now having almost a cut of 1%. Just 2 counters in Nifty 50, that is from Apollo Hospitals because the hospitals are expected to be there and be the safeguards, and that's 0.5% gain is what we are seeing on Apollo Hospitals. But on the flip side, Titan is just having 0.4% of a gain right now. Let's see whether or not we are able to defend those gains. Other than that, the breadth of the market is very much weak. It's more than 2,200 stocks that are declining on the NSE index as we speak right now. But with this, viewers, we believe there are a lot of queries that are already pouring in. We are just at the last leg of the show, so let's quickly take the last few queries that we can on the show. And the next query that I have is coming in on NTPC. And Kunal, this one is specifically from you, coming in from Sanjeev. He actually has two queries. One is NTPC, where he bought the shares at a price of 430 rupees. He's at a double-digit loss in this one. And he also has Tata Consumers, bought somewhere around April month, having 20% loss in this stock as well. What is your take, Kunal, on both of these names?
So I think both these stocks are, have gone through a decent correction. NTPC, I think, has corrected from 450 levels to now 330 thereabouts. And Tata Consumers also, I think we've seen many of these FMCG stocks correcting by a margin of 25 to 30%. Now that's a bit of a steep correction already in place for many of these names. But the only concern for both of these charts is that there are no major signs of a bottom formation which has started to come back into these names. So price-wise correction has made the stock look very attractive, both NTPC as well as Tata Consumers. But then ideally after a price correction, there is generally a phase of stagnation of at least 1 to 3 months for these stocks where they consolidate and get back into a trading range. I would believe that a better time could probably arise for you to average out these stocks maybe over the next 1 to 2 months, not at current levels. I would believe that if NTPC, for example, comes back to say 320 levels or 300 to 320 range, say over the next 1 to 2 months, that could be a good buying opportunity. And same is the case with Tata Consumers. If the stock happens to drop by, just about some 5 to 10% from current levels further, that could be a very good opportunity for you to try and accumulate further.
All right, Gaurang, coming to you. This gentleman is Vimal, who's writing from Mysore, and he has a question on Tata Power. He wants a fundamental analysis. He says that he has purchased the stock at 240 rupees. Now, this stock hasn't really moved much in the last 6 months. In fact, it hasn't given any returns. But if you look at the management, or what the management of Tata Power has to say, they say that they do aim to reach 1 lakh crores worth of revenue by FY30, and they're also waiting for government policy on the private-public partnerships for nuclear power generation, and they have started working on the technical capabilities of nuclear power generation. What are the future prospects for this particular counter? But because if you look at this last 6 months odd, this one's not done anything. In fact, it has corrected almost 12% in the last 6 months.
So short-term blips and underperformance should not deter your long-term objectives. That's the primarily advice. Prudent to say that we have a buy coverage on Tata Power. I think preliminary targets are somewhere close to about 460. And I'm quite sure and confident that from a long-term point of view, if the company is able to deliver, which we are quite sure, then these targets would get revised. I think upcoming budget would be a budget wherein a large focus is going to be on renewable energy. And as we all know, Tata Power has stepped on the pedal as far as renewables are concerned in a big way. Solar is a big project that Tata Power has already undertaken. EV charging stations is the other one. Conventional power generation and CapEx is something that they are willing to undertake. So, 3 months, 6 months underperformance is not comparable when you look at 12 months, 16 months and 24 months performance. So instead of being disappointed, and he's gotten at a very decent level, I think 240 is what you mentioned. So you don't have any reasons to worry, hold on to it.
Tata Power's the fundamentals remain intact for the long term. But on that note, we're completely out of time on this edition of Buy Now, Sell Now. Gaurang, Kunal, thank you so much for taking the time and joining us. With that, it's a wrap. Shrishti and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action is being taken forward at Markets at Noon.
If you like this video, then like, share and subscribe to ET Now.